Welcome to this episode. This episode, we will be talking about the rebounding on businesses. In the last 2 years, when pandemic is affecting the whole world, many businesses are going through challenging times. Cash flow is low, debtors are challenged, creditors are challenged. So the whole liquidity in the market is at a standstill. But today, we bring to you how peer-to-peer lending can help you to propel your business to a new level of new height. Now, in this episode, we talk about raising capital and short-term funding in these challenging times, as we bounce back to a new economy. Zero into the Securities Commission Malaysia approved peer-to-peer crowdfunding, which is an alternative asset class and also an alternative funding sources for businesses. Now, what is short-term financing or lending? Let me read to you. Short-term financing is a type of loan that is obtained to support a temporary personal or business capital need. As it is a result of a type of credit, it involves repaying the principal amount with interest by a given due date, which is usually within a year from getting that particular loan. Short-term loans are called such because of how quickly the loan needs to be paid off. In most cases, it must be paid off within 6 months to a year, at most 18 months. Any longer than the term loan will be considered a medium-term or long-term loan. Before I zero into peer-to-peer financing, let me take you through in a macro view, that is, what are the available investment and financing tools that's available. So basically, if you look at this particular chart, you can see bank fixed deposit, Sukuk, peer-to-peer investment note, and stocks. Who are the governing bodies for these respective tools? For bank fixed deposit is governed by Bank Negara Malaysia. For Sukuk is actually being governed by Securities Commission. Peer-to-peer investment note is actually governed by Securities Commission. And stocks are governed by Bursa Malaysia and Securities Commission. Let us go deeper into the risk level of each of this particular asset class and also financing tools. For example, for risk level, fixed deposit is very low, whereas Sukuk is low to high. Peer-to-peer investment note is medium to high. Stocks is definitely on high risk. Next, we look at the tenure. Fixed deposit is roughly between 1 to 12 months, whereas Sukuk is between 1 year to 20 years. Peer-to-peer investment note is usually short-term, which is 1 month to 12 months. Whereas stocks, the holding period can be 1 year all the way to 20 plus years. Now let us look at the potential yield from the investor's point of view or the depositor point of view. For bank fixed deposit is roughly between 1 to 3% per annum. Sukuk is roughly between 1.5% to 4% per annum. Whereas peer-to-peer investment note is roughly between 6 to 18% per annum. For stocks, it can, because of its risk profile, it can be low and it can be high as well. Who are the issuers for this particular vehicle? For example, for fixed deposit is usually issued by banks. Sukuk is issued by large corporations or government bodies or GLCs. Peer-to-peer financing is issued by SMEs, some large corporates which are non-listed, whereas stocks are usually issued by listed companies. Is the principal guarantee for fixed deposit Malaysia? It follows the PIDM subject to the terms and conditions. Whereas for Sukuk, there's no guarantee. For peer-to-peer investment note, there's no guarantee. For stocks, there is no guarantee. Now, what is peer-to-peer financing? Peer-to-peer financing is a form of crowdfunding that enables SME to obtain financing and investors like you and me to invest into capital through online platforms registered and approved by Securities Commission of Malaysia. As of October 2021, there has been noted that 14,000 successful campaigns and more than 1.13 billion funds has been raised to assist 2.7 thousand SME issuer, which means 2,700 plus SME businesses has been able to obtain almost 1.13 billion ringgit Malaysia to sustain their businesses in these challenging times through a Securities Commission approved platform called crowdfunding. Now, what does that mean, peer-to-peer crowdfunding? Yeah? It means investors like you and me, we are helping the SME business owner to sustain their businesses in various business needs. So for us to transfer our money, our capital, we need to go through a system. And this system is an online platform where it's governed by Securities Commission. So our money, you and me as investor, as low as $100, as little as 5 ringgit can transfer into this platform. And then from this platform, the money is given as an installment or as an investment note to the SME business owner, which means over here, 2,700 businesses benefited from you and me here. And how does the money travel? The money travels from you and me here into a platform which is online capital platform approved by Securities Commission called the crowdfunding or the peer-to-peer financing. From here, the money is being transferred to the SME business owner. And with the business owner, they are using this capital and the fund for various objectives. Let me take you through further. Let me take you through how has peer-to-peer platform performed in the last 2 years. Investors like you and me who actually put in our resources into this online platform to help this particular SME business owner, our portfolio would have earned between 6 to 12% per annum with a well-diversified portfolio. Or what do the business owner use this money for? So basically, they use it for 3 main objectives. Number 1, which is for general working capitals. Number 2, payable financing to buy material or services. Number 3, invoice financing, which means they obtain advances from investors like you and me by selling their invoices. So these are the 3 major uses of the financing that's given to the SME, which means in these challenging times, Malaysia totally, investors like you and me, has given or invested in a platform, combined platform, different various peer-to-peer funding platform, almost totaling about 1.13 billion ringgit Malaysia to help at least 2,700 SME business owners in Malaysia. So what are the features of peer-to-peer platform? Let me take you through one by one. The first thing, the repayment tenure is between 1 to 36 months. Second, financing amount is between 100,000 to 15 million per SME. The third one, there is no specific preferred industry, which means every business owner like you outside are accessible to such funding. Number 4, are there any collateral that's required? Generally, there's no collateral required. Next thing you'll be asking me, who are the issuers and who are the investors? Investors are basically you and me. We can invest as little as 5 ringgit and we can invest as much as we like. Now for issuer, the issuer are usually the SME business that required our financing for them to mitigate finances challenges in these challenging times. Who are the investors for this peer-to-peer funding? Basically, investors in peer-to-peer fundings are open to all investors subject to the following limits. Number 1, retail investors. Retail investors are persons who are not sophisticated investors, a maximum of 50,000 per platform at any period of time. Number 2, angel investors. Angel investors accredited by the Malaysian Business Angel Network. There's no restriction on the investment amount. And the third one, sophisticated investors. Sophisticated investors are persons within the categories of investors set out in Part 1, Schedule 6 and 7 of the Capital Market and Service Act 2007. It means there's no restriction on investment amount, which means investors can invest as low as 5 ringgit as much as we want based on the respective category of investors that you are in. Then for the people who are receiving the funding, which is the SME businesses, they can receive as little as 100,000, as large as 15 million per SME. Will this be helpful for you to mitigate the challenging times in this time? The answer is yes. It can be used for working capital. It can also be used for mitigating the challenging times now. It can also be used for you to propel your business to another level of heights. What are the return of investment for peer-to-peer financing and what are the risks? Let me take you through what are the return of investment. As we shared earlier, is between 6 to 12% if you diversify your portfolio and your investment note properly. Now, on the other hand, what are the risks that you may encounter as an investor? Let me take you through the 10 risks that you may encounter as an investor. For more information, please click to the Securities Commission website to understand the actual risks or the diversity of risks that is being explained in the website. Let me take you through quickly the 10 of them. You must know your psychological risk, which is your own personal risk profile. Number 2, if you have not diversified enough into various investment notes, they may pose you a concentration risk. It means you put too much money in one basket. Number 3, losing money due to bad debts. It means some SME business owners are not able to pull through and they're not able to pay us back. Number 4, losing the money due to the peer-to-peer lending site going bust. It means the platform has failed us. Number 5, losing money due to fraud or negligence. It means that a fraud by the SME or fraud by the negligence of the platform as well. The next one, selling into a loss, crystallizing a loss position. It means taking the position ahead of time without giving space for this SME business owner for a pickup. Number 7, losing because we can't sell earlier. The liquidity issue. It means sometimes there are risks due to liquidity issues. Number 8, loss of capacity to earn from unlent money. There's a cash drag. Number 9, reduced real earnings due to inflation and inflationary cost. Number 10, reduced earnings due to legal or taxation implication. So these are the 10 risks. We will not take time to elaborate the 10 risks. Do read up from the Securities Commission website to understand further. But let me take you through why do we introduce peer-to-peer financing in this episode. Malaysia economy is backed by the SME of Malaysia, and SME represents the backbone of a nation's economy and many nations' economy in the Southeast Asia. So by encouraging and supporting and helping the SME to rebound from this post-pandemic situation is very, very important for us as a Malaysian, for us as a nation. Therefore, this piece of information or this episode is specially recorded so that all SME business owners are able to access to such financing for you to pull through this challenging time and also for you to propel your businesses to a great level, to a new level of great heights. If you like this episode, please subscribe and share. For the first 200 participants in this particular campaign will be getting 20 ringgit each from our corporate social responsibility partner, which is MoneySave. Congratulations to the first 200. You are officially right now an investor in a peer-to-peer funding platform.